You're now tuned in to the Desire to Trade podcast, a show where we bring you the best figures of the trading world and teach you how you can become a successful trader. This is your host, Etienne Crete.
Etienne Crete here, Forex trader and founder of Desire to Trade. Welcome to episode 93 of the Desire to Trade podcast. Before we jump in the show, I just want to introduce today's sponsor of the podcast. FX Street is the leading independent portal dedicated to the Forex market. It offers objective and high quality content, as well as education to traders and institutions worldwide since the year 2000. It's pretty much my go-to option whenever I want to find analysis, live currency news, or whenever I want to find a guest for the podcast, someone who's dedicated and who's hardworking. They even have a list that allows you to compare different brokers on their website, like which one has the best spread or many other factors, which I thought was pretty smart. If you guys want to check it out, you simply have to go on fxstreet.com. Again, that's fxstreet.com, and I'm sure that's going to help. Alright, so this week for the episode, I've been able to discover someone that I feel is really interesting to listen to. Someone who talks about a lot of the same topic I like to talk about. If you could associate that guy with one or two words, it would be peak performance. Stacey Burke is really a big fan of all these things that make you a better trader over time. And that's exactly what we talked about today in this episode. Stacey has gone through, like many people, the rough path to become a successful trader. And he realized just by changing a few things, he's been able to move forward much faster. And that's exactly what we focus on in this interview. So this show is going to be focused on helping you become a better trader in a faster time by implementing some tactics. And I recommend you take note of those because there's so many things we talk about here. So many things that you could implement, so many ideas. But don't try to put everything in practice. Pick one or two that you're going to work on the most and then go to the next one once you've mastered the previous ones. So please help me introduce for this amazing episode, Stacey Burke. Stacey Burke, welcome on the podcast. How's it going today?
Fantastic, Etienne. Thank you for having me on as a guest.
Awesome. I'm really excited about this interview because we kind of touch on the same topic sometimes. And I've seen a couple of your blog posts, and I'm really excited to dive in that topic for sure. It's going to be
excellent.
Great. The first question I started, what is one quote that inspires you?
My quote that I have over my laptop in front of my desk is that, know your enemy and know yourself, and you can fight 100 battles without disaster. Sun Tzu. I think that's the one quote that reminds me every single day, as Paul Tudor Jones would say, to play great defense.
Yeah, awesome. And I've seen an article on your blog recently about like kind of trading quotes, like the best trading quotes. And if you don't mind, I'll just share one because there's one that really resonated with me on that blog post. It says,
perfect.
Good systems tend to violate normal human tendencies, which is, I think, amazing, from William Eckert.
Yes. Yeah, well, William Eckert was a market wizard. And again, I've been the king of mistakes. And I've been unusual in that I got exposed to trading around 2000, and I think had a lot of excellent instruction. I had the skills, but I didn't really connect all the dots. And I kept breaking my own rules. And it wasn't till a couple of years ago that a couple of key things happened that really, I think, allowed those, management methodology of things and the psychology to actually click and make sense to me. And that's a perfect example of that. Traders, continue to violate their rules, but they don't do anything different and expect a different result. So
yeah, it's pretty strong. And we'll definitely talk about those, but I want to go back in time a little bit and tell us how you started to trade exactly. Like, how did you come to trading in the first place?
As I told you before, my professional training was as a doctor of chiropractic. I came to Perth in 1997 for 2 years to work. And while I was here, towards the end of that first 2 years, I attended a seminar on how to trade the Australian SPY contract futures market, which is a futures contract on the Australian share price index. And that got me hooked. It was all based on end-of-day trading. The instructors were phenomenal. I had great instruction on real basic, Edwards and McGee classical sort of charting techniques. And from that point, I just couldn't believe that I'd never been exposed to trading, and I was hooked. from there, of course, I had the worst things happen. I had some winning trades right off the bat. And of course, from that point on, it got worse.
Okay.
And from around 2000 onwards, I went through a 10-year journey of, just doing all the wrong things, going down to shorter time frames, moving stops, averaging into losing trades, impulsive, irrational, emotional trading that, just basically was a roller coaster of wins, and then one big massive loss that would wipe out my wins. As I mentioned, there was a couple of years ago, probably a bit more than that, 3 or 4 years ago, where I was listening to some podcasts from Peter Brandt and Brent Penfold, two people who I had read their books and followed for quite a while. Brent Penfold, as you're aware, had wrote a book on the Australian Share Index, and I really valued their information. But for whatever reason, when I was following Peter and studying him, which I still continue to do, some things about asymmetrical risk-reward and Brent Penfold's, being a great loser, it just clicked. And that's when things started to make more sense technically with the psychology side of things. So, we all see the same stuff in terms of, cut your losses, follow the trend, all these, things that we give lip service to, but I didn't really actually practically implement that. And, following these gentlemen, some things really started to click with risk of ruin. And that's when things started to turn the corner.
Nice. The thing I'm kind of really amazed though is that it took 10 years for you to become kind of profit. Like you said, you had 10 years of like kind of losing trades and all that stuff. So like, how do you stay motivated when you have 10 years of like back and forth between profit and loss?
Well, historically, I come from a sporting background. I was an ice hockey player, and then I got involved in Ironman triathlon, and I've always been a very competitive person, very stubborn, which is probably not a good thing for trading. But I've always said that I was going to figure this out. I guess the hard part is, and I tell everybody, you can figure this out, but don't destroy your trading account before you figure it out. And I think that the biggest thing is, for me, there's not a day that I don't wake up that I'm not excited to, study the markets, follow my system, try to get better, working on myself. I don't know. Innately, I think that we have to train a mindset to be inspired. And I think that the great thing about the markets is that the opportunities are unlimited.
Yeah. But I kind of like the way you're saying it, where you're not kind of addicted and like you don't enjoy making money necessarily.
Absolutely.
Like you don't wake up to make money. You wake up to follow the process and kind of become better.
Absolutely.
It's like a big difference.
Yeah. I mean, obviously we come to the markets because there's an attraction there to make money. But at the end of the day, the real challenge is the game. And I love what Jesse Livermore said. The game taught me the game, and it didn't spare me the rod.
Yeah.
So, but I love the challenge. Obviously, the way to measure your progress is your positive expectancy. But, I love it. I love the markets. And I think that's part of it. You have to have the passion. You have to have the desire to put in the work and put in the effort and want to get better and just wake up for the challenge every day.
Yeah, if you see it like a sport, it's probably much better than seeing it as a money-making activity.
Absolutely. It's you got to get. I have another saying. It's you get paid for performance. So if you don't perform, you don't get paid.
Yeah, exactly. That's good. I like it. So tell us a little bit, what are the things you had to put in place for you to get out of that 10 years of losing trades?
Well, I think for me, the biggest thing that most traders are challenged with, which was certainly one of the things that I faced, was I didn't want to be wrong. I didn't want to lose. And I really did not understand that losing was part of successful trading. And Brent Penfold's got a great quote, the best loser is the long-term winner. And that, again, when I started to really look at Peter Brandt's approach with classical charting and having an asymmetrical risk-reward, that's when I understood it was okay to take a loss, because when you had your winners, you were, getting 4 or 5 times your return. So, and I've been in lots of losing trades where I would hold on to those. And of course, those were the ones that when I was wrong would go against me 3 or 4 times to 1 and would blow up my trading account. And that's why it's easy now for me to take a loss. And I still take lots of losing trades, but it's so easy now because I know that when I'm wrong, I need to be wrong as quickly as possible. And, I try to look at how can I lose less on my losing trades and how can I do that as quickly as possible. And that's why, again, with Peter Brent Penfold, simplicity is a big thing. You want to be wrong right away because it's just another trade. And that's something I always say to myself in the back of my head. Every trade is just another trade. So winner or loser, it doesn't matter. I know that if I stick to my plan, when I get into these larger moves, those are the ones that are going to actually pay back all my losses plus put some more into my account.
Yeah, and I think it's just really, really powerful. And I'm not sure if it's just Livermore who had like this reward of like basically he gets 5 rewards for 1 risk. So like it's something crazy.
Well, I know
80% of the time, which is really
that's
cool.
right. I read an article where Paul Jones won't look at a trade unless he can see a 5-to-1 reward on it. And that's when, again, like Peter's stuff, I didn't understand. I sort of understood, well, yeah, he wants to try and make 5 times his money. But when I look at the classical charting and look at the different breakout patterns and measured moves with what I learned from Peter and just applying some of the stuff that I was exposed to, back around 2000, but I didn't actually really understand that clearly. That's when I started to understand that you can take that 1 hour loss and you could see where your measured moves were going to give you 3, 4, or 5 times your return. And that's where I think a lot of traders, there's a gap there between actually merging. Like I always say that money management, people, I think the misconception is just, I'm going to risk a certain percent on every trade. That's certainly part of it. But I think the real understanding for me for money management is understanding that I needed to have an asymmetrical risk reward when I'm exposing my capital to the market.
And I think often people want to have the higher probability because it's like easier, like you feel better. But when things turn bad and you don't have the high probability, you kind of screw it up.
Yep. Yeah. And I guess that sort of sums up. I was looking for the Holy Grail. I thought that I had to write on every trade. I wanted to win. I wanted to make money. And, that's obviously a recipe for disaster. And the real Holy Grail is being able to have your simple system, hit those trades methodically without any hesitation. And like Brent Penfold, he's got this great idea where he debits his account.
Oh yeah. That's
when
huge.
Every trade that he puts into the market. Yeah, and that's something else. I just started telling myself, I expect to lose on this trade, and I want to reinforce the fact that when I put expose money into the market, it's got to be based on my money management rules because I know I'm probably going to lose on that trade, and I debit the account. I try to follow Brent's model because I want to stay in the game long term, and I want to have monitor my trade expectancy. And so if I'm wrong, I want to keep that 1 hour as low as possible and my positive expectancy hopefully growing.
Mm-hmm. And I kind of see 2 challenges with that thing afterward. I think the first one's going to be to find a way to get a high reward, and the second one's going to be to like follow that plan. So how do you deal with those
Absolutely
things?
Yeah. I think that as a retail trader, that is our biggest challenge. A lot of people go to algorithmic trading because it removes the variable of themselves interfering with that process. And I think maybe the advantage of me having that longer time frame of having that roller coaster of ups and downs, it's easier for me to stick to that now because I know the mistakes I've made in the past. But every day, really, there is a challenge. But that's why I think that traders need to focus on simplicity. They need to have a mechanical model. They need to have a simple approach that they can reproduce and duplicate, week in, week out, which will allow them to keep things simple and to be able to follow that process without a lot of hesitation. And again, not have any one trade like Peter Brand says. If you've got, if you're expecting that one particular trade is going to be the one trade that's going to save your year, well, that's a recipe for disaster as well.
Mm-hmm. Love it. And how do you actually develop your own strategy? Was it something you've created yourself or something that you took from someone else?
Well, I think I've tried everything. But
yeah.
Funny as you say that, everything, it comes full circle. And I've just gone back to really simple horizontal patterns, breakouts. I look for, rectangles. I look for classical charting patterns, a very simple model. And that's pretty much it. I tried programming different stuff over the years. I looked at 5-minute charts, 1-minute charts, hourly charts, and I went back to just basic technical analysis. I don't do many diagonal type charting. I stick to mainly horizontal ranges and just basic trend lines, just basic technical analysis.
Mm-hmm. So no kind of candlesticks or whatever?
I use candlestick charts, but I just use, again, horizontal ranges. There are certain patterns that I think are, reproducible. I like Peter's approach with the weekly charts and looking for markets that are compressing for a bigger move. I think month in and month that most of the markets produce a reasonable range of opportunity, and some are some really simple setups that I don't always get them, but when I participate in them, it gives me an asymmetrical opportunity. So, and there's lots of trades that I'll get in and then I'll get stopped out and then they'll move. It's the same old story. I'm trying to get into the process. As I was mentioning, with shifting to mostly end of day, I'm trying to follow a larger basket and manage it more as a portfolio. And hopefully, if I can do that, that'll allow me to be off the screen and manage money in a bit more larger account size without having any vested psychological capital on any one particular trade. I found that with the intraday trading, it requires, there's more seat time at the screen. And oftentimes you can become like a deer in the headlights, where once you're fixated on one currency pair, you lose perspective on other things because you've got some skin in the game. And I think that in order for me to get to the level that I want to, the way that I want to trade, the end of day trading is certainly where I want to be at. So,
and it's kind of funny you mentioned this because I just recently moved to end of day trading as well. For me, it's kind of more morning trading because it's like in Asia. But I cannot really stand the 1 hour chart trading because that's the thing. You're always in front of the computer all the time, I guess. Is it something
that's right.
you were doing before?
Well, most of my hourly is because of Perth and my time zone. It was based on the Asia Close and London Open.
Okay.
But sometimes that would spill into the New York Open. So, I conceivably could be at the screen, or at least having to check the screen over 4 to 6 hour time frame. And I have 3 young children, and that time frame tends to be right at the end of school, and they're all in sport. It can be chaotic. And I just found, also looking at where the majority of my mistakes have occurred, it was usually during an intraday time frame. The great thing about end of day, I want to be able to place my orders, park it, come back the next morning, and reassess where that position's at, whether I've stopped out, if I need to move my stop, that sort of thing. And I think for myself, the hands-off approach is better rather than being at the screen. And I think, again, most of my mistakes where I've done damage have been during the live sessions, and I just prefer to be off the screen.
Yeah, and I think it works as well for me that way. It's much easier to manage everything, for sure.
I think the other thing with that, which I think is important, is I was getting some good trades, but I was missing out on the larger moves that would happen over the longer time frames. So the daily chart might go on a 4 or 5 day move, and I might participate and get 50 to 100 pips out of a 400 pip move. And I think that's the other thing to consider is that, the end of day markets offer some great opportunities. And if you're trying to constantly scalp out of the market, I think, again, the more you trade, the more likely you're going to make mistakes. So if I can, look at how can I reduce my mistakes? And I think as a retail trader, the longer the time frame you go to, the better you place the odds in your favor.
Mm-hmm. But I see kind of the opposite problem, where your kind of feedback loop is much longer. So it takes more time for you to see how your trade unfold and maybe learn from them.
Well, at this point, I know now, after following these markets for long enough, that there's going to be every week. I think there's just 3 really good trades every week over 10 to 20 pairs. There's more than that, but there are plenty of opportunities for traders today to take a low risk or a good trade setup that allows them to have a manageable downside with a asymmetrical upside. So,
pretty cool. I like it. So, what are some of the trading routines that you've put in place over the years?
Well, some of them haven't been that good, but the routine that I have in place now is I'm an early riser. So the first thing I do when I'm pretty simple. I use basically a notebook, pen and paper, notebook. On iTrack, I do have Metastock scan that I run on the end of the day, so I have to wait for that about 45 minutes. My rollover for New York is at 5 a.m. Perth. That's the same as 5 p.m. in New York. So my data arrives about 45 minutes after that, but I'll manually go through about 10 of those markets to check my charts. But I also run the scan on Metastock over 23, 24 pairs for some simple stuff that's coded in there. And then I'll go back and check those. Now, if there's a signal that's come up, I'll look at that make a decision as to whether or not that fits my criteria. If there's a trade, I'll put an order in, a stop, and at this point, I'll leave it. Now, again, I was shifting from hourly. My previous routine would start around 2 o'clock in the afternoon. I would look at the Asia close and London open. I would run through about 8 markets in particular, the ones that were a bit more volatile. And I would look for certain types of setups that had occurred over the last 12 to 14 hours. And if they weren't there, I could narrow that down to maybe 1 or 2. And I would look for just a couple of really simple patterns on those markets.
Then you repeat that every single day pretty much.
I do it every day. Yeah. And when, Saturday, Sunday, I go back, I usually will review the week. And like Mike Bellaforia, I build a playbook. I'm constantly screenshotting stuff and making notes. There isn't a day that I'm on the screen looking to try and, I guess, hone my edge or improve my skills some way, somehow. This is a game that requires constant improvement. And yeah, as I said, I try not to be on the screen too much. My wife would probably disagree, but again, once my weekends are, I'm an early morning person. So once the kids are up, we have sport pretty much all day on Saturday, Sunday. So, but yeah, I have a routine. I try to build the playbook. I've got some goals. I go through my routine with that. I'm always reading or I have my headphones on. I love listening to the podcasts. As I said to you earlier, I listen to some of your other guests who have been sort of cyber mentors to me. I just think it's critical that every day you're feeding your brain with material that keeps you on track and keeps you emotionally oriented as a trader, which, I love with Peter Brandt and Brent Penfold again, that, you're a risk manager. Your job is to manage your capital. And that's your first and foremost job, is to protect your capital.
Yeah, that's awesome. And I think one of the things that your routine kind of shows me is that you don't spend much time trading, but you spend a lot of time outside trading to prepare yourself, which is a big thing.
Yeah, like I'm big into, I guess, with coming from a sporting background and a health background, I like to get out at least, for an hour a day and have some time to myself and work out, go for a run, take the dogs out, whatever. You've probably seen some of my videos. I'm down at the beach a lot. Mm-hmm. We spend a lot of time together as a family outside, but I recognize that balance is a big thing. Whenever you go to one extreme, the universe by default will bring you to the other. So I strive to try and find that not only in my trading, but in my personal life and, in my, I guess, emotional orientation and just having a balanced perspective on.
Mm-hmm. That's really interesting.
Trading's only one thing. Like, it's a vehicle. I'm not where I want to be in terms of my long-term goals with trading. And that's the great thing. There's always another level to get to. And I think you got to remind yourself that life is short. You got to enjoy every single day. There's 3 things that I value. It's my health, my family, and the time I have here on the planet. So, we've got to look after those things and enjoy every single day.
Yeah, I love it. And what are some of the tools you use? Like we talk about your paper journal, which I also use a lot, but what else would be a tool that you use a lot?
I love EdgeWonk. I got onto EdgeWonk through listening to Tom Dante, and I got in touch with Moritz, and I've just been, I'm still sort of blown away. I'm a real novice with using it, but I'm excited that I figured out how to upload my data. And now I'm just stoked because I now have a vehicle that, does all the work for me. And I think it's important that you have some kind of feedback that shows you, you think I'm terrible with keeping records in that sense, that detailed of metrics that show you actually what the real 1R is and what your positive expectancy is. And, am I into tilt? And I just know that over the next few months and over the next year, it's just going to help me constantly keep improving. But I've got some numbers now that can demonstrate that. And that's critical because I think we have a family really about how we're trading as retail traders, but the numbers are and it's not just profit and loss. It's, all these other little great metrics that tell you where you're at as a trader.
Yeah, totally. Yeah. And what would be some of the metrics you look at, for example?
Well, I think some of the stuff is obviously, the average loser, average winner in terms of our ratios. I think the stretch factor, like how much heat do I take on a trade? So one of the things, my average, like I know on my hourly charts, I can pretty much do that manually. I know my average loser's about 35 pips. On most of the pairs, it's a bit bigger on the Mexican peso. So on the end, that can vary, obviously, because the ATR and all the different pairs varies, but I think there's some really just critical numbers in terms of if you can, as I was saying, if I can figure out how to lose less on my losers. So one of the things that they look at is that if your winning trades maybe only go 30 pips against you, and you're taking an average loss of, say, 60 pips on your end of day, then you can probably tighten your stop up a bit more and know that on your winners, you're going to still maybe have that 30 negative press against you. But if you're wrong, you might be able to tighten up your losers a bit and lose less on your losers. And on my winning trade, same thing. Maybe I'm getting out when my average winner has moved another 50 pips past where I got out, so I might be able to squeeze out another 30 pips. That part of it for me is probably not as critical. The process is really important, and I'm just right now trying to get into the whole process of making everything very much methodical, like, being professional with your approach to the markets, treating every single day. You're walking into an office, it's a business, and you have to treat it as such. You need to have some kind of concrete feedback that shows you where you're at with, what you're doing in the market. So I'm still getting my head around a lot of that stuff. But definitely, I think it's critical for traders to, it's one thing having a little spreadsheet, but it's another thing when you've got this software that just spits out all these little things to you, and it's like, wow, I didn't know doing that. I guess I need to work on that.
Like spreadsheets are going to be really manual. It's just boring to fill in a spreadsheet.
Exactly.
What about trading checklists? Are you still a fan of it? Do you have something on your desk to remind you like what to do or something like that?
Yes, I've got little notebooks everywhere but I keep a notebook on my desk, scratch notes, and a lot of it is the same stuff over and over again. Just simple things, about execution and, focusing on great defense, managing my capital, just reminding myself that, this trade that I think is going to be a huge trade is probably going to lose money. So I need to manage that with my money management rules. They're really little. I'm psychology. The trading side of it is pretty straightforward. I've got, a pretty simple approach. So it requires me, though, to be diligent about making sure I don't miss a day, and that I run my scans, that I go through the market, tick the boxes. But I try to, as simple as possible, because the less, analysis paralysis that I have, the less experience I'm going to put in of myself into that decision-making process.
What would be one thing that you wish you knew when you started to trade?
One thing I wish I knew when I started trading was that how to lose. Losing, it's funny to people when you talk to them about the markets. They think there's some secret holy grail, but learning to lose is critical. I know a lot of really smart people that have been successful in different professions and sporting backgrounds and everything else, and they cannot succeed as traders. And part of it is that they just cannot get past the idea that it's okay to lose. And actually, it's not just okay to lose. It's critical that you become a very good loser, because that's what's going to ensure your success if you have a positive edge in the market.
I think that's a big quote. So is there any other advice you would like to give to traders, something that they should really know about?
As I said, I think understanding losing is critical to success in trading. But the other side of that is that you have to have an asymmetrical edge in the market. And this is where I think it's critical. If you're not familiar with Peter Brandt, study his work, Richard Schaubacher's text on classical chart patterns, asymmetrical risk reward. It's critical that you have at 3, 4, 5 times to 1 trade range opportunity. It's one thing taking a loss and being good at losing, but if you don't have an edge in the market, it's useless. So risk of ruin is something that Brent Penfold talks about. That's, I think, really what brings that together. It's being able to merge a positive edge in the market with proper money management. And if you can do that, then you've got a chance to succeed.
Okay. So how can people find you if they want to reach out to connect with you and see what you're doing?
I'm at StaceyBurkeTrading.com. Pretty simple. You can find me on YouTube as well. I'm I've cut my teeth at the School of Hard Trading Knocks, but I really, one thing that I am is I'm a survivor. I'm a hard worker. I've learned from some of the best people who are the real deal in trading, and I continue to learn from them. Every day is a new thing. Like, I have a little mantra, and that's ILT, invest, learn, and teach. And I believe that in investing in yourself, investing in learning from others, learning that material, master it, and then sharing it with others. And if you can share it and in a simple, concise manner, it will help me improve. I think that's where you come from as well, Etienne. And I think that has really, that has helped me just every day stay on track, stay emotionally orientated. I still continue to make mistakes, but, I believe in failing forward. I don't have a problem with making mistakes as long as I can learn from that and get better tomorrow.
Awesome. So what kind of goal do you have for the future, Stacey?
Well, as I mentioned, my immediate sort of medium-term goal is to be 100% end of day and be able to mechanically follow these markets. I've got a simple model that I've coded in that I'm still sort of tweaking, but I want to be 100% off the screen and continue to hopefully improve that with my results, and then also pass that on to others and continue to hopefully learn from other traders. I love the markets. As I said, there's not a day that goes by that I don't love looking at this and doing it. And, I'm inspired. I know that it's, they say 90% of traders fail. I think it's higher than that, but I think that there's people out there that are looking for just a hand up. And I think that's what I've had. And as I continue to work towards getting better, I think it's important to try to be able to pass that on and hopefully in the process get better myself.
Yeah, that's huge. Love it. And I like the fact that you're kind of process oriented. Like you don't because most of the guests that when they share their goals, the one thing they think about is like money, like I want to do this or that. But you're kind of more process oriented, which is really interesting to hear.
Well, I think that the money side of things is, obviously everybody needs to make money. We all need to eat. I've got 3 kids. They're expensive. I think that money is a byproduct of the work, but not just the work, but like Bellafour, he talks about this in One Good Trade. You've got to be doing the right work, and it's got to be producing a result. And I think that, just focus on constant improvement and every day working at it. That's the money will come.
So we have a question we ask the guests at the end of every podcast, Stacey. If you could give only one piece of advice for traders in one sentence, what would that one sentence of advice be?
Keep it simple and learn how to lose.
Love that. So Stacey, thanks so much for being on the podcast. It's been a pleasure to have you here.
I'm very grateful for you, Chen, and thank you. It's been a pleasure of mine. Thank you very much.
All right, guys, so that was it for the episode with Stacey Burke. I really hope you liked it. I liked it a lot. And I recommend you guys check out the YouTube channel because there's probably going to be kind of a follow-up episode to this sometime with Stacey that we'll try to record to help you guys move faster even more. One thing I'd like to ask though is if you guys have been listening to the podcast for a while and if you enjoyed the podcast so far, or if you have any suggestion, please leave a review for the podcast, whether it's going to be on iTunes or Stitcher, to help me know a little bit what to work on and what you guys would like to see. If you like the podcast a lot, leave it 5-star. I'm really happy with that. But if not, if you have any suggestion, I'm ready to learn and to implement those. So make sure to check out desiretotrade.com. The links are going to be there to go on iTunes or Stitcher and then leave a review. It's going to be the best thing to do. And it really, really, really helps me a lot. So I look forward to this. And I want to give a shout out to people who left a review recently, especially to Jorg, who left a review on Stitcher. Really appreciate, as well as GST, although I cannot know the name, but thank you for the review a lot. I appreciate. So on that note, thanks guys for tuning in the podcast this week. And I'll see you guys next week for the next episode of the Desire to Trade podcast. Ciao.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desiretotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.